Good morning, good morning, good morning, everyone. This is Don Daniel, founder of P.I.L.L Method International. And the P.I.L.L Method Club is now joining forces with the Mortgage Syndicate this Sunday. And we have the founder of the Mortgage Syndicate right here, right now, Mr. Jonathan Bing. Mr. Bing, would you please go ahead and introduce yourself to the folks?
Hey, good morning, folks. Jonathan Bing. I'm the president of Nation Mac Mortgage and co-CEO of Cinch Business Academy. Happy to be here. Happy to support. Thank you so much, Don.
You are so welcome, and thank you for offering this opportunity for us to work together and present our unique and special message to your audience this morning. Rosalora Lewis, how are you doing?
I'm great. I'm great, Don. Hey. Hey, everyone. My name is Rose Laura Lewis, also known as Credit Goddess. I'm all things credit, credit score improvement strategist, business credit coach, educator at Be Free University, and NAV business loan broker. So, all things. And I'm glad to be here and talk about the subject, student loans. I know we haven't tapped into it, but yeah, it's about time because they delayed the payment. So let's talk about it. Let's help strategize what we should do at this point when it comes to our student loans. So I'm excited about this conversation. Thanks, Don.
Listen, we've got some exciting things to share about student loans, and this is a through line from it's a podcast that's on NPR, and you need to know the history behind student loans. Whatever we're doing, folks, you want to know the history. And there's a reason why the Biden administration can make these choices about student loans where you think they might not be able to. Oh, yes, they can, because it's a government-backed loan, a government-backed program. You need to know the history of how it got started and how it went awry. And this is the history of it. So copy this link, tag this link. All right. You do not want to miss this story. Daphne Christine, how are you this morning?
Good morning, Don Daniels. Man, I love your energy and I love coming in your room. I'm doing great this morning. I just wanted to, as one says, I wanted to pull up and I wanted to support you. Like he said, my name is Daphne Christine Johnson. I'm a real estate investor and also co-CEO at Cinch Business Academy. And since he said I could, I'm going to do a shameless plug. Last week, we just launched Debate the News Morning Edition, and that's running Monday through Fridays here on Clubhouse at 10 a.m. And if you have the opportunity, I sure hope you guys will join us. Don, thanks for having me this morning. Glad to be here.
Daphne, I'm talking about the story behind the stories, okay? Because people, when they know the story behind the story, then they can relate. Is there a story behind this story that says, oh, we can now do Debate the News Morning Edition? How did that come about?
Well, listen, I think the story behind the story is we wanted to make sure that that conversation, that the conversations in the community that we provide is available to everyone at different times, right? Because everyone has different schedules, and we have such a good time debating the news in the evenings that we wanted to make that available at least a little bit in the mornings, and so that's how it's come about, and it's really been a big hit, and I sure hope you'll come over and join us.
Listen, I would love to be there. I just was wondering, is anybody looking at the demographics? Is anybody looking at the data that's coming in from your shows? Are you satisfied with your outcomes?
It's funny you asked that. John Bing's the one that's taught me how to look at statistics and look at those numbers in those rooms, and it is important. It's important to know if you're satisfying the audience and how to make that grow and how to cultivate and curate a better space and experience for the listener. And so we're trying to do that. But like I said, it's we've done a great job already this week with John Bing's help. We've been able to have more than 2,000 people come through every single morning, and I'm real proud of that. So thanks for asking.
Well, listen, folks, you just heard it here. If you're doing a show, if you're doing a live show, if you have a product or a service, or even a message that you want to get out, and you want to use social media, you want to use this app, you want to use what we're doing, we're using Clubhouse, and I'm live broadcasting also totally on YouTube right now, Facebook right now, Twitter and LinkedIn. So you'll not only hear us here on Clubhouse, but you are going to be able to see the numbers that I'm going to be able to put up to show you how you can get rid of student loans and mortgages in about 7 years once you know the rules to the game. Right now, guess what's in the news right now? Guess what's in the news right now? Oh man, if you know anything about the real football, okay? I mean world class football, soccer, we call it here in the US. Everybody is tuning in to the World Cup. You know? And I'm telling you right now, can I tell you a little secret about me? You don't want me on your soccer pitch. All right? That's the that means the soccer field to some people. This is called the soccer pitch. I know that much. But you don't want me on your soccer pitch. Do you know why? Because I don't know the rules. You know, and they've got a thing called, and I'm still trying to understand it. And if anybody plays football, maybe they can help me to understand it. But I don't understand offsides. You know, when the opposing player has the ball and he's heading towards the goal, but he's outrunning the other players. You can't outrun the other players, and they call that offsides. And I'm trying to figure out, why is that wrong? I mean, in American football, you outrun the other players, you can score a goal. But here, listen, you can't outrun all the other players. Can anybody explain to me offsides? That may know something about the real soccer. But anyway, if you can, raise your hand, come up to the stage and explain that to me. But the point is here, my main point is, I'm going to be showing you the rules to this game today. And if you want to see the examples, then you want to go to, on a secondary device, please go to YouTube or Facebook or Twitter or LinkedIn. Then you want to search P.I.L.L method, and then you'll find our live broadcast. And then you can watch these numbers on the screen and be amazed. But right now, folks, I want to share with you something that is so very important right now about student loans. Can I share with you a little bit? I would love to share more, but we got 42 people in here. And I would love it if you could, if you're not a member of the mortgage syndicate, could you go ahead and tap that little green house above our heads and join the mortgage syndicate? And on Monday through Friday from 6 a.m. Eastern to 12 p.m. Eastern, they are here giving out valuable information on all things real estate. Oh my goodness, day after day after day, such valuable information, 6 hours a day. You do not want to miss it. All right. So go ahead and tap that. And please, could you also tap on my profile here and find the P.I.L.L Method Club and join that club as well. We are over 9,000 members in our club, and we're giving out valuable information 3 times a week. And Rosa Laura Lewis is here. She's our credit expert, and she helps you to level up. And so we love to have her in the room. And folks, I want to get started here. If you go ahead and share the room. Can I ask you a favor? Share the room. We have 41 people in here now, but if you share the room, we're going to show you some secrets about student loans that you probably never noticed before. And so let me start out with this, okay? Now, a lot of people have student loans. And before we forget, I need everybody to click on that link and save that link so that you can know the history behind student loans that I have on the screen right now. That is from Throughline, and it is a historical podcast, and it does a history on a lot of different subjects. This is a very, very good show. I learned some things that even I didn't know, and I study student loans. So here's what we're talking about, folks. You want to understand, and I'm also going to put it in the in our, there we go. Now I've just put it in our chat online. So now that we have that, so people who are watching us online can see it as well. But here's the thing about student loans, folks. Do you know I had people come into my office not long ago that graduated from college over 30 years ago, and they still have student loans. 30 years ago, and they still have student loans. Do you have student loans? Do you know anyone who has student loans? And listen, and everybody on the stage today, all of our moderators, anytime you want to jump in, please feel free to jump in and comment and help to bring this conversation to life. So here's the thing. 30 years ago, they graduated from school. I run into people who come into my office all the time with with similar comments. I still have student loans years and years and years after I've graduated from college. You know what else I'm hearing? I need you guys to focus in here. I mean, lean in right now. If you're watching me online, lean in. If you're listening to me, I need you to stop what you're doing right now. A lot of people that come to me with their student loans owe more now than they did when they graduated. They owe more now than they did when they graduated. How in the world can that happen? And you might say, oh, maybe they weren't paying on their loans. Well, let me let me dispel that for you right now. I know people who have been paying faithfully on their loans for the last 20 and 30 years, paying faithfully, not missing one payment, and they still owe more now than they did when they graduated. How in the world did that happen? If you've got a story about student loans, please raise your hand. Our moderators will bring you up to the stage. We would love to talk to you about it. And I can show you, and we're going to give you some relief today. We're going to show you how you can pay off your student loans a lot faster within 5 to 7 years. People who are on my program, on the P.I.L.L method program, P.I.L.L stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. People who are on the P.I.L.L method program pay off their student loans in an average of 5 to 7 years without having to make more money. That's number one. And without having to sacrifice lifestyle. That's number two. You mean you don't have to eat beans and rice to pay off your student loans and your mortgages. In fact, our clients, the P.I.L.L method clients, pay off their mortgages, their student loans, their car loans, and their credit cards, and any other loans that they have in an average of 5 to 7 years. So, oh, Don, if they're doing that, then their student loans can't be very much. Do you realize I have people who are doctors and lawyers who funded their entire college education from undergrad through grad school, through med school on student loans because they came from humble beginnings? Their parents didn't have the money. They didn't have the money. And they had a goal in mind. They had a dream, and they funded that dream with student loans. And even they can pay off their loans in 5 to 7 years on average. Oh yeah, we're going to remove all the excuses today. And if anybody has any story about student loans, come on up. Now, let me tell you how that happened. How in the world can we owe more now than we did when we graduated? Here it is. In the mortgage industry, it's called a negatively amortized loan. In student loan speak, it's called getting a payment that is income based. A payment that is income based. And a lot of times, your income based payment does not mean that they give you a new amortization schedule. That does not mean they figure the loan, they're going to reconfigure the loan. Now, in every payment, there is a sum of money that goes to principal and a sum of money that goes to interest. All right, in every payment. When you get an income-based payment, it's not totally explained all the time, but sometimes the payment that you have does not fully cover the interest cost. Does not fully cover the interest cost. What does that mean? Well, let me give you an example. So if you have, let's say you have a payment and part of your payment, let's say $200 is supposed to go to the interest. But because you have an income-based payment now, your payment drops to $150 to help you out. Well, remember, your interest portion was at least $200. And then after you pay the $200, then you could put money on principal to pay down the loan. But now your interest portion is $200, but you have been told your payment is now only $150. So if you're not covering the entire amount of the interest, what happens to that $50 that you did not pay, that you were supposed to pay as part of your interest payment? Does anybody know? You can come to the stage or put it in this chat. Somebody says, here, Latina says, I graduated in 1988 and still have student loans. Listen, dear, we're going to be able to, Latina, we're going to be able to show you something today that you are absolutely going to love. Anybody who wants to come to the stage can you tell me what happens if you have a $200 principal payment, interest payment, and you only cover $150 of that interest payment? What happens to that other $50? Put it in the chat or raise your hand, come to the stage. Or if you're online watching us, go ahead and watch us there. Could anybody tell me what happens to that $50?
It goes to the balance.
What do you mean by that? What do you mean by that, Rosalora?
It goes back to that. Well, it doesn't go back to the balance, but it's added to the balance. So it increased it by $50.
Wait a minute. If I owed $200,000 on my student loan, because I did not pay the $50, now I owe $250?
Yes.
And if they're charging me interest on the $200,000, now they're going to charge me interest on the $50?
Yep.
So I start paying interest on my interest?
Yep.
Lord have mercy. Folks, how many of you knew that? If you knew that if you get an income-based payment, how many of you knew that some of you are paying interest on your interest, and that is why your student loans are way more now than how many people know that? How many people know that that can happen? Put a number 9 in the chat. Please put a number 9 in the chat if you knew that that's how these student loans actually work. Ooh, Darcy says she knows. She knows how that works. All right. Anybody else? Anybody else know that this is how this works and this is how this is what's being done to us? Creator Goddess says 999. She triple knows it. Okay. Anybody else? Listen, folks, what we want to do here is tell you the truth about student loans and how they work. It is going to be absolutely amazing. I'm going to put some things on the screen, but you don't want to miss it. You do not want to miss how this works. You want to be able to see what we're doing here, all right, so that you can know how to get rid of these loans. You want to know how the loan actually works. And I'm going to put some things on the screen so that you can be able to see what's happening. Uh-oh, I've got to change some things around here. Let me minimize this. All right, cancel that, minimize this, and there we go, and share my screen. Let's see here, gotta make that so we can share it. All right, and so we can put some things on the screen for you today. We're gonna share this screen, boom, and bring this up. So if you are watching, if you wanna see what I'm doing, if you're new to the room and you wanna see what we're doing, please go to YouTube or Facebook or Twitter or LinkedIn and search P.I.L.L method, P-I-L-L method, M-E-T-H-O-D, and you'll see our live broadcast so you can see the numbers. You want to be able to see that. And while I'm getting that ready, I would like to have Gus O'Feely. Gus, will you please introduce yourself right after Miss Donna? Miss Donna, how are you doing? Miss Donna, are you there this morning? All right, she'll come in. It'll come in a little bit
I
later.
am right here. I was actually sharing the room and commenting in the chat. Good morning, everyone. Donna Anglin here, located in Canada, business purpose loan broker, commercial lender. Been in the space to learn and to add value where I can.
All right. So Miss Smith asked, do they do mortgages the same way? No, mortgages are not done the same way. All right. You can make interest only payments on a mortgage in certain situations, but that's not this. All right. So in fact, well, I take that back. It used to be that you could get a negatively amortized loan prior to the 2008 debacle. I don't know if they've come back. So I'll have to ask Jonathan Bing about if they have negatively amortized loans, if they've come back into fashion. I don't know. I can't tell you that. But it has happened before. I don't know if it's still happening. You used to be able to get a negatively amortized mortgage.
They're illegal.
Ah, there you go. See, they're not illegal when it comes to student loans, though. How about that? And you're going to wonder why. Why in the world would a student loan be set up so you can never, ever pay it back? Well, if you listen to this podcast, that will give you a great understanding of why you can do that. All right. And I'll listen, I'll give you a little taste of it while we're getting set up here. Gus, while I'm getting everything ready and telling this next story, will you please introduce yourself and tell the folks what you do, please?
Don, thank you very much, and good morning to everyone. My name is Gus O'Philly. I'm an associate broker in the state of Maine. Also, I have 31 units that I rent out long term. Just here to support Donna, and as far as what Donna is trying to go ahead and produce. I've been watching Don for the last year as far as him getting the information out that it doesn't matter about the interest rate. You know, right now you're seeing on the news that there's an emphasis. The emphasis right now is the interest rate and that increasing. Well, Don's sitting here, and sorry, I got in the room a little late, but he gives every single day not only his time on Clubhouse, but his time on Facebook, his time on YouTube, his books, his website. He's giving information on how to go ahead and cancel out that interest that they're trying to charge on you. So instead of us looking at right now isn't the best time to purchase a home, he's giving you a reason why it's the best time to purchase a home and how you could save money in the long term. So with all that being said and done, that's why I want to come here in this room. I wanted to get on stage. I wanted to support Don as far as what he's looking to do, because what he's doing is he's giving back to the people as far as giving them an opportunity to save their money in the long term. So Don, thank you for letting me be in the room with you today.
Thank you, sir. I appreciate you so very much. Now, let me tell you just a tiny bit as to why a student loan would be set up so that you can never, ever pay it back. And they don't care if you never pay it back. Oh, there's no other loan like that in the world. Well, here's the thing. Where else can you, at the age of 18, with no income, no job prospects, you don't even know what your major is going to be, you don't even know how you're going to be able to pay this money back, how is it that you can always go and get a student loan and never be denied with no job? That's number one. It is guaranteed. Here's the thing. If I'm a lender, if I'm a private bank, I'm a lender, and there is no way I'm going to lend anybody money if I can't prove they're going to be able to pay me back. There's no way I'm going to do it. But what if it's a government-backed program that guarantees that the lender will get their money? Wow, that means anybody can go get a student loan. Oh my goodness. And the government will guarantee that it gets paid back. Do you realize this is why student loan companies fight to be on that private list on universities? This is why student loan business is huge. This is why student loan companies will go in and say, listen, let us be on that list and we'll put up a building on your campus. Oh my goodness. It is something that is a great competition. It's ferocious competition between these student loan companies because it's government money guaranteed. And all of the people that had a problem with having the loan forgiven, they don't realize that the reason why they got the money in the first place was it's government money. The whole thing is government backed. So if the government gave out the money, why can't the government go ahead and forgive it? You see, so people are saying that these are deadbeats. The people are deadbeats. They're not paying back their loans, blah, 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 blah. But when you see what is happening, a lot of these student loan companies have already received their money because it was government backed. What? And they're still looking for you to pay more? And they're okay with setting up a loan where you're only paying the interest or even a portion of the interest for the rest of your life because they've already received their money. Folks, this is why I need you to listen to the history of student loans so that you can know what's really going on behind the scenes. So I've got the link right above our heads. Go ahead, and if you want to see these numbers, okay, I call this student loan larceny. I already got these numbers up, but I think I have somebody on the stage that may want to ask a question. And Hank Zappa, how are you this morning? Do you have a question or a comment?
Hey, good. Glad to be here, man. Thanks for having me.
Good. Do you have a question or a comment this morning?
I did. So, if you have an outstanding student loan, what is the best way to proceed to pay it without them garnishing? You know, because if you make yourself visible, there's a chance they may not help you, and then they just start garnishing your stuff. So, what's the solution?
All right. So here's the thing. Can you afford to pay the student loan? That's number one.
Yes.
Okay. So I'm going to show you the best way to pay back a student loan. And the best way is not to pay all of the interest that you would have to pay according to the schedule. Okay, because it's the amount of interest that makes the loan's lifetime, not necessarily the amount that you owe. So what if we could show you how to cut your interest cost by 50 to 75% on those loans, so more of your money went to actually pay down the loan instead of going to interest? Would that be of interest to you, Hank?
Yeah, that would be amazing.
Okay.
Who do you talk to?
All right. So I'm going to actually show you. Are you on? Are you in a position to look at a tablet or a computer?
Not currently.
Okay. Well, then you'll be able to listen in and watch the replays later on YouTube. Okay. I'm getting ready to put some numbers up and to show, and I call this student loan larceny. Folks, if there are any other people in here that have any questions about it, please raise your hand and the moderators will bring you up. All right. And so right now we have 48 people in here and 11 shares. Please, I guarantee you, for most of you, you've never seen this information. I'm not giving you something warmed over or something I gleaned from YouTube and I'm repurposing it and I'm dishing it out to you. No one talks about this. And the only reason I can talk about it is because I have something that a lot of people have, and it's called Asperger's. And it's a high functioning form of autism. So when I see an amortization schedule, I see something different from what a lot of other people see. I see benefits in an amortization schedule where a lot of other people see problems. All right. And so we're going to learn how that all that goes. And I'm going to jump right into this first example right after Credit Ninja introduces herself and tells you what she does. I'm going to get a drink of water and then we're going to jump in right into the first example. Credit Ninja, how are you this morning?
Well, good morning. How are you?
I am excellent. Thank
Guys,
you.
happy Sunday. It is Sunday after Thanksgiving. Wow, what a great time to talk about paying off your mortgage. I love that. Why 7 years and not 8 years? I just want to know. But anyways, eight's my lucky number. Um, hey guys, planning is everything, and I think getting prepared for your game plan before the new year is the name of the game, and having these discussions about budgeting and paying off mortgage and investments and all that gets you like prepared for the new year before everybody else. So I think that extra head start is going to get you going. Hey guys, Credit Ninja here, coming in from Las Vegas. I am a credit expert. Been doing this for about 31 years, started in the data space and then moving into the consumer space. So I help entrepreneurs get access to capital by optimizing their credit. So I'm here to support any way that we could get the play. I'm going to use Jonathan's word and Daphne. Any way that you can get the play on how the blueprint works in any type of financial situation is going to give you the competitive edge against everyone else. It's nice to like not worry about debt and use that debt for other things like building your business. It's nice to wake up in the morning and know that your home is on its way to being paid off. So back at you, Ice. Thanks for having me.
And thank you. And listen, we just have Kareen just came in. And the only reason why I'm letting her go now before this first example is I know she's got a room coming up fairly soon. So you do want to tap in with all the moderators on the stage for what their product or their service if you have a need, because only people get moderated on this stage if they've been vetted and they know what they're talking about. Miss Kareen, could you please introduce yourself? Tell the folks who you are before you have to leave.
Good morning, Dawn, and good morning, our friends that are here on stage and in the audience. I see some friends in the audience as well. Thanks for having me, Dawn. Good morning, everybody. I just actually got out of Clubhouse Church. I was in David Hill's room. It's such an amazing room. My name is Kareen Mills with a heart on my photo. I'm the founder of Kareen.club. It's the number one money keeping, money making, and money multiplying club that promotes financial literacy inside my private club. It's so much fun to teach people financial literacy because it is not taught in school, neither it is taught in our workplace. So one of the amazing things that we talk about is your mortgage. Dawn, I am looking forward to having you into one of our master classes next year to teach the hack and how to hack this mortgage amortization. And I do have your book and I'm enjoying reading your book. So if you don't have Dawn's book, The Pill Method, go to Amazon and find Dawn over there and start reading it because it is very empowering to have. And Dawn, you and I talk about a lot about my background in finance, banking, and insurance and financial services. And even the bankers that, as an individual that's been in the banking industry, we don't even know what this book teaches. And I believe that as a banking industry, the banking industry should do a better job educating their people, their clients, but unfortunately is not part of the training program. And these bankers only know what they know. So they only teach what they know and they've been trained for. So in any case, Don, I know you're changing the world. I love being in your room because that's the reason why I hang out with all these people. We are all changing the world as a collective. Back to you, Don. Thank you.
Thank you so very much. And folks, Listen, if you're new to the room, we got 18 shares. Thank you very much. We have 74 people in here now. We have 201 people that have come through this room. And if you want to see what I have on the screen right now, it's called student loan larceny. All right. Go to your tablet or your laptop computer or whatever you have, and then you can search on YouTube, Facebook, Twitter, or LinkedIn. You can search P.I.L.L method, and you'll be able to see these examples. And what I have on the screen right now is called student loan larceny. If you're ready to learn something that you've never learned before, buckle your seat belts right now. We're getting ready to get started. Is everybody awake? Here we go, folks. Here's what I'm talking about. This is an actual situation of a person that I met a few years ago. I had opportunity to speak to students here in Huntsville, Alabama. All right. And the student was getting ready to graduate. And then after I gave out my business card, they called me and it says, I'm getting ready to graduate. We did okay with our finances, and I've got a student loan, and I need to buy a car to be able to get back and forth to work. But I didn't want to be paying on that stuff forever. After learning about interest cancellation, how can I pay off my car and my student loan? Okay. So I said, well, what is your student loan? And this is what he told me. I have a student loan of $9,500. I said, oh, you mean $95,000? He said, no, $9,500 at 6%. And I have a payment of $50 a month. I said, okay. Well, I asked him, I said, based on what you know or what you think, how long should it take to pay off $9,500 at 6%? And when you're paying $50 a month? He says, well, I don't know. Maybe 5, 7, I don't know, 10 years. I don't know. So folks, here's what I want to ask you. Put it in the chat. How long do you think it should take to pay off $9,500 at 6% if your payment is $50 a month? How long should it take to pay that off? And I'm waiting for either raise your hand, come to the stage, and if you're already on the stage, you can just pop it out, just unmic and say, how long do you think it should take? All right. And Credit Goddess says, oh, about 30 years. Anybody else?
5 years, Don.
5 years? Okay. I got 30 years and I got 5 years. Anybody else? Okay. Who else has a guess? All right. I hear some. Karen Mills says 22 years. Okay. All right. Corrine Mills says 22 years. Daryl Ellis says about 5 years. Okay. All right. I'll take one or two more. Anybody else have any other guesses about how long it should take? And I will show you what's going on here with these student loans. And Michelle Esther says 15 years. Let me show you, folks. Let's put it on the screen. Steve Mack says forever. Lisa Martin says 12 years. I split the difference. Okay. Let's take a look at it, folks. How many years? Okay, I'm putting it on the screen now. Here's the breakdown. Here's the summary. $9,500, $50 a month, 6% interest rate, 601 months. 601 months. Folks, that's just over 50 years. Can you imagine giving a student, someone who has not been taught how loans actually work, put them in a position so that they can have a $9,500 loan at 6%, $50 a month, and will take them 50 years to pay it off? Why would anyone do that? I need you, if you're new to the room and you want to get some history on this thing, I don't even have my link, which is ice10k.com, ice10k.com. I don't even have my link at the top of the room. I have this link at the top of the room. It is a history of student loans and the U.S. government, how the U.S. government got into the student loan business. Oh, by the way, did you know we came within a hair's breadth of having free education in the U.S. because of military personnel? But somebody came in and blocked it. You want to see this. You want to listen to this podcast. And then we'll come back and talk about it sometime. All right. So listen, folks. Here's what I'm talking about. 50 years. What do you think about that? All right. What do you think about that? 50 years. Let me show you how this breaks down. $9,500, $50 a month, 6%, and total interest paid on this loan. Put it into an amortization schedule, folks. You will see this for yourself. $20,550. $20,550. Corrine Mills says, and by the way, you can't dismiss student loans through a bankruptcy proceeding. Okay. Listen, we want you listen. Credit goddess is $2.2 is going towards Prince. What? Look at this. Look at this. She's already done the math on this thing. Credit Goddess is good at doing the math. All right. Watch this, folks. That's total repaid, a $9,500 loan. If you structure it this way, you're going to pay $20,550 in interest, and the total repaid is $30,050. Folks, how in the world is that legal? How in the world? And do you want to know the total interest paid as a percentage of principal? 216.316%. 216% of what you borrowed, you're going to pay in interest. 216%. And Lisa says that's grossly offensive. Grossly offensive. But guess what, folks? Because you know how to read an amortization schedule, the amount of interest that they're charging on this loan, I'm going to show you how not to pay it. How would you like to turn this completely around? And the amount of interest that the bank is charging you on this one, how would you like to be able to save it without having to change your budget? That's what we're talking about. We're talking about learning the rules. Troy says, that's seriously predatory lending. You better believe it. So, folks, all we want to do here is show you some information on how the banking industry does what they do. Here is what you also want to know. And I'm going to make this clear before I show you the rules to the game. Oftentimes, we're here on Clubhouse giving out this information that is gratis. That is, you don't have to pay me for this information. But folks, I'm here to tell you, people have gotten some of this information from other other rooms and other clubs, and they get the free information, and they think that's all that there is. And they go and try to take the free information and implement it. The free information it is impossible to give you everything you need to know to optimize your interest savings here. We're just giving you the basics so that you can know that there's something going on here that you're going to need some professional help with. All right? Everybody here is a professional. And what we're doing is making sure that you know enough so that you know you need to seek a professional's help. Please don't take this information and go out and get yourself in additional trouble and then blame the information. Get with those who are giving the information and get a system that is designed specifically for you. Okay? Now watch this. Now with my little disclaimer there. Watch this. So here is how this loan breaks down, folks. A $50 payment. And as you can see here on my screen, $2.50 goes to the principal. That, when you're paying back this loan this way, only $2.50 out of your payment goes to pay back the loan. The bank is getting $47.50 out of that payment. Oh, but it gets better. It gets better the next month. Yeah, because the amount of interest that you pay is only $47.49 instead of $47.50. Can you imagine? Can you imagine somebody paying a loan like this forever? For 30 years, where only $2.50 goes to principal, $2.53. And then month four, $2.54, $2.55, just to get a payment you can afford. And a lot of people are get into this, and they think that because I have this payment, they get locked into that payment and go on with life for the next few years, locked into that payment because now they're living their life. They want to get, they want to get a house, they want to start a family. And this is how this loan is breaking down. $2.50, $47.50 going to interest. So let me teach you how to read an amortization schedule right now. When the bank does its math to figure out how to pay this loan, $2.50 goes to principal, $47.50. So we're going to subtract the $2.50 from the $9,500, and you see the principal balance here. The principal balance is $9,497.50, while the $47.50 goes to the bank. All right, so that's what you're left with. Now, the bank takes that principal balance, the 9,497.50, and then does its math to figure out how much interest we pay on line two. Rosalore, are you with us this morning? Because I know you're busy.
Right. Mm-hmm.
Rosalore, would you mind telling people how in the world the bank turns this, what most people would think, what is 6% of 50 of $9,500? How does the bank turn this into paying back over $30,000 in interest on a $9,500 loan? Can you show them how they get those interest payments each month? Would you mind doing that
Mm-hmm.
for us today?
Nope, I don't mind. I don't
Oh,
mind.
all right, folks. Here's something you're going to need to learn. I need everybody to listen in. I've got 22 people on watching us online. I have 78 people in here right now. And if you want to see this, go to YouTube or Facebook or Twitter or LinkedIn, search P.I.L.L Method, and then you can watch us live on your secondary device. Now, what you're going to be able to learn right now is what the banking industry does using their formula to amortize a loan. We're going to show you how it's done so that and some of you, this will be the first time you've ever seen this. And I'm going to put a calculator on the screen, all right, Credit Goddess, so that we can follow along with you, okay?
Mm-hmm.
All right, so let me pull this up and put my
All right, so while he's getting that together, I want you guys to write down this formula, and someone can type this in the chat. This is the formula that you guys gonna always use, so that way you can calculate interest that you're being charged. A lot of times we focus so much on the interest rate, but we also need to know how much we are being charged interest on the monthly basis. We all know the APR term, which is annual percentage rate. So I'm going to kind of show you guys how this is possible, how they were able to come out with this number with this formula. So you're going to take the amount that is owed, whatever amount that is. So $9,500 is the example that we have today. So $9,500, and we're going to multiply that by the interest rate, which is 6%. Okay. And then whatever number it gives us after that calculation is the APR for the year. Okay. Then we're going to take that APR for the year and we're going to divide it into 12 because we want to know how much we're going to be charged interest that month. Then we're going to subtract it from our monthly payment. And that's whatever number that is going to give you, that amount is going to go towards the principal balance. And whatever we divided from the APR dividing by 12 is the interest payment that we're paying for that month. So your $50 doesn't go towards all of the principal payment. Majority of it, interest comes out first, and whatever that's left goes towards the principal balance. So that's pretty much how it goes. So let's work out the numbers.
Okay,
So
I'm ready. I got my my on my screen. I have my
calculator.
calculator on the screen, Credit Goddess, so people can see it, and you can work it out. If you're watching this, you can work it out yourself. If you're on Clubhouse, take out your calculator and work this thing out. You'll be able to see it for the first time in your lives. Go ahead, Credit Goddess.
Yes. Well, let's work out the numbers. So what we're gonna do, we're gonna take $9,500. Don, we're gonna type $9,500 on the calculator,
Got it?
and then we're gonna multiply that by 6%. So you
Okay.
remember in math where they take the percent where you just move the decimal over twice. So that's 0.06. That's 6%. Or you can just type the percent sign after you type the number 6, and it will give you, what does it give you? I think it's
Okay.
570,
I
right?
got 570.
All right. So that's the APR for the year. That is how much in interest you're going to pay for the year. So say, for instance, you're paying $50 every single month. In a year, you have paid $570 in interest over the year. And what's 50 times 12? 50 times 12 is what? Is that $600? Right? $600.
Yeah. Yeah.
And if we subtract 570, only $30. See where we already going? So when we're focusing so much on the interest rate is what is the interest cost. So let's divide that 570 into 12 because we want to know what we're paying in interest for the month.
So if I'm dividing my 570 by 12, right? I get $47.50
Okay,
in interest.
$47.50. $47.50 out of that $50 payment
Mm-hmm.
that you made, $47.50 is going to the bank. And
Wow.
whatever that's left after that $50 is going to the principal balance. So as we see on line 1, principal balance $2.50 and $47.50 was given to the bank out of your $50 payment that you made that month.
So Credit Goddess, if we take, so we just learned this. That's how they got the first payment. Will that work on the second payment as well? So if I take
Yep.
the $9,497.50 that I now owe, will it work again?
Yes, it will.
Take
So
it.
now what we would do is we would take $9,497.50 and we're going to multiply that by 6%
Okay.
because you're being charged 6%
Mm-hmm.
on the remaining balance that you owe every single month.
Wait a minute.
It's like a
Wait a minute.
new,
Wait a
yeah.
minute. It's not the $9,500 times 6% somehow. It is, I'm taking like 1/12 of the interest rate and multiplying it by the unpaid balance every single month.
Mm-hmm.
So it's not $9,500 one time. It is the unpaid balance 600 times.
Yes.
So it's
Yep.
a new loan every month for 600 months.
Yep.
Oh my gosh. Never
And you're
listen,
being charged 6% on that new loan every single month.
folks. If you did not know that, if you did not know that's how your loans work, would you put a number 7 in the chat right now? That if you didn't know, if you didn't know how that works, put a number 7 in the chat right now. Look at there, 7. Put 7 in. All right. Dr. Rita says I didn't know. Valerie says I didn't know. Okay. Now a lot of people are saying they did not know. Here's my next question, folks. If you didn't know this right now, this simple formula, is it possible? Is it just possible that a 7th grader would be able to understand what Credit Goddess just broke down? Is it possible? If you believe a 7th grader can do it, put a yes in the chat. Put a yes in the chat if you believe a 7th grader could understand what she just. Everybody's saying yes. Everybody's saying yes. Here's my last question. Why aren't we teaching this in 7th grade then? Why are we allowed to grow into adulthood and not know how a loan actually works? Come on, something is going on here. This is not good. Karen Mills says yes to the moon and back. they could do it. And Crystal says, Panther says, she's had that same question for years. Had the same question for years. And Stan Joseph says, I teach classes on this. And he says he's trying to do his part. We appreciate you. We appreciate you, Ellis San Jose. All right, so I've got okay. I got a little excited, Rosalie. I'm sorry. I'm putting in my $9,497.50. So I got all right. I got it in 9,000. No, oh, listen. I got too excited here. 9,497.50. Got it.
Yeah.
All right. I'm
Yep.
ready.
All right. So then we're going to multiply that by 6%.
Okay, Toy wants to know what is the main loan? It's only $9,500. $9,500. Okay? That's where we started, Toyo. Okay, so now what did you say, Credit Goddess? What are we doing next?
We're going to multiply that by 6%.
Okay, we're going to multiply it by 6%. So multiply by 0.06 equals $569.85.
All right. So it just went a couple of dollars down from $570 last month because we paid $2.50 towards the principal. So we're going to divide that into 12.
Okay, we'll divide that by 12. Okay, divide that by 12 equals $47.48, but it's 487. So we have to round up that 8 to 9. So it's $47.49. It's just 1 penny less.
1 penny less. And that one extra penny less went towards the principal balance. $2.51 went towards the principal balance, and $47.49 of your $50 payment went to the bank.
Folks, I need you to write in the chat. How does this make you feel that this is going on right now legally in the United States with children graduating from school with loans like this to carry into adulthood? How does that make you feel right now? I need you to put it in the chat. All right. And if there are any hands raised, can the moderators go through and invite anybody who has their hands raised to the stage? Oh my goodness. How does this make you feel to see that this is happening right now today? Do you see why it's so important for you to watch this, to listen to this podcast so you can find out the history of student loans in the United States? I mean, information you did not know. This is why the Biden administration has the power to do what they do to forgive loans and to suspend payment on the loans. You wonder how he can do that? How the administration can do that? You're going to learn why they have the power to do that when you listen to this podcast. So if you're new to the room, click the podcast at the top of the room that says Throughline and save it so that you can now get it. All right?
Question, Don.
Go ahead.
So if they're extending payment,
Yeah.
Are they freezing the interest?
Yes.
They are?
They're currently freezing the interest.
Okay. All right.
Because they can
when you put your loans on forbearance, interest is still being accrued.
Right. And that's the whole deal. They're freezing the interest right now. And the Biden administration has given another extension. All right. While they work out how, because the loan forgiveness has run into a snag. All right. And there's a lawsuit, and it may have to go to the Supreme Court so that they can actually forgive some of these loans that were government backed loans in the first place. This is a government situation. And when you take a look at people who have been, and there are some that are saying everybody needs to pay back their own loans. Well, listen, folks, a lot of these people, maybe even most of them, have already paid back more than they borrowed in just the interest because of predatory lending practices that we didn't even know was going on. So we've got our $47.48 and 49 cents, and now we can see what's going on here, folks. Now, if you want to see, all right, if you want to see how we can beat the bank at their own game. Now, this is not my method. This is not the P.I.L.L method. I'm just showing you how easy it is not to pay this. And this is why you're not being taught this in seventh grade. This is why the people you call listen, don't call up your student loan company after tomorrow. All right. Don't call them and ask them these questions. I guarantee you that the person answering the phone has not been taught this either. So don't berate the person that answers the phone about this situation, because only the owners of the company understand how an amortization schedule works. They're not teaching it to their employees. Okay? All right, everybody? All right, here we go. If you want to learn something, I need you to go ahead. Crystal says, my daughter is a freshman at Southern University. And is that Southern in Tennessee? All right. My daughter is a freshman at Southern University. I'm trying my hardest to make sure she doesn't have to get student loans. But the tuition is a lot for me as a single mom. I wish there was an alternative. There is an alternative. Learn how to borrow the money at a discount, Crystal. I'm going to show you how to borrow this money at a discount. Are you ready? Are you ready? I need you. If you want to see how to borrow this money at a discount, put a number 7 in the chat, because we want to be done with these in 7 years. All right. Put a number 7 in the chat if you want to know. Oh, Crystal. Okay. All right. So listen, I'm in Huntsville. My wife used to work at Oakwood. All right. All right. All right. So the student I'm talking about here is a student from Oakwood University. All right. Crystal, thank you for being here this morning. I know. Wow. I know. Isn't that something? All right. So, folks, here's what we're talking about. Here's what we're talking about. You want to learn this? I see number 7. I see number 7s. I see the number 7. I need you to watch this very closely. Watch this very closely. I'm going to get my credit off the screen. So, here's what we've just learned. The bank takes 1/12 of the interest rate, multiplies it by the unpaid balance 600 times. If you're new to the room, I'm going to go back and show you the breakdown on this loan. All right, here it is. We're going to go back to this screen here. All right, watch this. Watch this. If you want to see it, go to YouTube, Facebook, Twitter, or LinkedIn and search P.I.L.L method so you can see these numbers. And it's a $9,500 loan, $50 a month at 6%. The bank wants $20,550 and in interest on this loan. So it's going to take over 50 years to pay it back this way, because so much money is going to interest. Total loan repayment, $30,050. And the original amount borrowed, only $9,500. Tammy Boyd is in the room. Tammy, ha! We love you. All right. So, folks, and if you want to know the total interest paid as a percentage of the principal, it is 216.316%, and it is as legal as the day is long. Okay? It's legal. All right, so now let's get back to where we were so that you can see where we are with this. So we got $2.50 going to principal, and then next month we got $2.51. All right, and then we take the unpaid balance and multiply it by 1/12 of the interest rate, and we get the very next payment set up for line 2. And then we could take the amount that we would have paid, the principal balance on line 2. We do the same thing to get the payment for line 3, and so on. Here's what's going on, folks. So now, if we take the principal balance from line 2, we get the payment for line 3, $2.53 going to principal, and only $47.47 going to interest. Now we're going to teach you how to read it. What if we did this? What if we made our first payment on this loan in January? We made our first payment on this loan in January, and $2.50 went to principal, $47.50 went to interest. And we can see the principal balance on line 2. Okay, because you have the amortization schedule and you can see it. Do I have to wait till February? And I need the people on the stage to talk to me, or somebody in the audience. Do I have to wait till February to give the bank that $2.51?
No,
Nope.
you don't.
No, I
Nope.
don't. So you mean if I had it, I can pay my $50 in January, and if I had it, I could give the bank an additional $2.51 in January as well. If I did that, folks, that money goes straight to principal. No interest comes out of that money. I'm paid down to the principal balance on line 2 in the first month, where I would owe $9,494.99. So let me show you what just happened here, folks, and make this very clear. And if you're new and you want to ask a question about this, we're going to stop here. We got some new people on the stage who want to ask questions about their student loans. Okay, so here's what we're looking at. We just found out that we could pay that $2.51 early and get paid down to the principal balance on line 2. What just happened? We just eliminated line 2 with $2.51. Line 2 is gone. What? Yeah, line 2 is gone with just $2.51. Now, I have an arrow pointing at the $47.49 on line 2. Can anybody tell me what happened to the $47.49 in interest the bank was looking for? Can anybody tell me? All right, put it in the chat. What happened to that $47.49?
Yeah.
Who can tell me? What happened to that?
It's canceled. You don't have to pay it.
It's what? Because I paid the $2.51 early, I do not have to pay the $47.49 on line 2. You mean it's that simple?
That simple.
Do you think that's the reason why we're not teaching this in 7th grade?
Yeah, because they make all the money if we just stay comfortable making the minimum payment.
Folks, how in the world does that make you feel when you could have avoided $47.49 and taken and eliminated 1 month from your schedule with just $2.51 here? If you knew what was going on. I need you to share this room a little bit more. If you think this is valuable information, there's no way we should have only 23 shares and only 93 people in here getting this information. Go ahead and share out the room just a little bit more. All right? Kareen Mills says, what a concept, huh? All right. And LibQ says, that's why my mother always paid that. Exactly. That's why she paid early. But the thing is, folks, this called prepaying the principal. And the reason why it's so powerful is because that's the way the math is set up. It is powerful and it works for us if we just knew the rules to the game. This is why we don't know. People have been paying extra on their loans for years. But here's what you have not received. You have not received ever from any banking institution, thank you very much for the extra payment. Here is how much interest you saved. If you knew how much interest you saved here with just $2.51, what could you do? What could you do? All right. So I'm going to finish this up. This example, and then we're going to take some questions. So watch this, folks. Here we go. We're going to break this all down. We're going to break it all down. All right. We just found out that we could eliminate $47.49 worth of interest with just $2.51 prepaid. Can I show you something that's even more powerful than this? Watch this. Do you see? I'm focusing on cumulative principal now in column 3. If you follow the bank's method here and make a $50 payment each month, then for 12 months you pay this loan down by $30.84. If you look immediately to the right, you'll see how much interest this student pays in just 1 year. The loan is paid down by $30.84, and the interest paid is $569.16. Watch this. What if, is there any rule that says I have to pay the $30.84 in 12 monthly installments? Is there any rule that says I have to pay it in 12 monthly installments? Huh? So the answer is, Corinne says, no, 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 no. There is no rule. Nope. Okay. The Q says, nope. All right. So what if we were to pay the $30.84, prepay it up front? Let me show you what happens to all the interest that we would have had to pay. Do you see that? Do you see that? I've got that outlined in red. Listen, folks, this is not magic. This is not magic that I'm doing here. What am I doing? Credit goddess, this isn't magic. What are we doing here? Wow, wow, wow. Courtney says, I was pushing for paying off my listen folks, we're doing all of this. We're going to show you what happens to pay back the mortgage and the student loans here, but we got to learn some basics. Okay, do you see how much interest we just got rid of? All the interest between line 2 and line 12 has been canceled, has been eliminated. Cassandra Creech says we're doing math. That's all we're doing, folks. This isn't magic, it's just math. This is the math of the situation. This is what my Asperger's brain actually sees. So I'm now taking what I see and I'm giving it to you to learn some of the basics here, okay, of the P.I.L.L method: prepayment of principal, isolating the principal amount, leverage, and liquidity. That's what's happening here now. So if I pay the $30.84, guess what I don't have to do? I save over $500 in interest if I prepay that upfront and I knock off 12 months worth of payments. Do you see now? If we understood this, do you see how it's possible to pay this thing off? I show this young man how to pay off his car and his student loan, all right? Not in 30 years, not in 50 years, and paid off his car and student loan in 3 years. In 3 years. The car and the student loan. That's what we're talking about here, folks, because we don't have to pay all the interest once you learn how to read an amortization schedule. All right? And we're going to stop right here. And then we've got to talk to some people who came to the stage. Let me pull to refresh so we can take them in order. I see Miss Yvonne here. Miss Yvonne, how are you doing this morning? Are you there? Can you talk to us? I'm going to listen.
She's in the chat.
Oh, she's in the chat. Miss Yvonne, okay. Can you talk with us this morning or are you busy?
Yes, I can talk, but I'm always switch tasking. My husband says it's not multitasking. Yes, ask Ice. I'm listening to you and creating a post for LinkedIn at the same time because I know I can do both of that. One ear and one fingers, right? And I'm also in the chat.
Okay. And I thank you for that. I thank you for that. Good morning to you. Do you have a question or a comment about what we're talking about today?
You know, I've listened to you, but there's one thing that I did not know is that you're punished for paying off your mortgage. I didn't understand. I didn't know that happened. Well, yeah, so I'm listening to that and learning more from that because
You say
I
you're
didn't know that. I thought it was a good thing.
you say you're punished for paying off your mortgage?
No, I thought somebody said that in the chat that you are punished for paying off your mortgage. Is that true or not true?
Well, it depends. Are you in Canada or in
I
Bermuda?
mean, yeah, I don't have a mortgage, but I just like the education,
Well,
right? So I like to learn more.
there are prepayment penalties for residential mortgages in Canada. But here's what you have
Hey,
to.
Don, this is Karine.
Yes,
We were in
Karine.
the chat. We're talking about the punishment on your credit score, and your credit score drops significantly once you pay off your mortgage to zero.
Oh yeah. And
Oh,
that's
that's
just, but that's
reasonable.
just temporary.
Yes. Hang out with us.
Yeah,
I
that's
think mine did. I think when I paid off my mortgage maybe more than 20 years ago. Well, I didn't have a mortgage. I bought my house cash. So,
yeah,
but my daughter has a mortgage, a small mortgage on her house, just around $100,000.
yeah.
The good thing is to buy a house, right? In 5 years, she probably scored her almost $1 million. Her house went up in so much in price, especially in the last 2 years. But an option is um, right now the option is not to pay it off because she only get 1.4% mortgage on that, and now the banks are paying 5.25 on your money, so it would make sense paying it off. But I
Wait,
always
wait,
like
wait,
the
wait, 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 wait,
information.
wait, wait, Yvonne. Before you go there, I can't let that hang. Okay, I can't let that hang. Okay,
All right.
you are better off. What we're teaching here today, you're
Yeah.
better off at the higher interest rates than the lower interest rates if you have a mortgage.
Is that true?
Yes. The lower
Wow.
interest rates are harder to pay off cheaper and sooner if your interest rate is too low.
Oh, woo. That what people would say, woo.
Yes.
Now you're talking. Let me hear what you're saying about that.
All right.
Educate me.
All right. So when you lower the interest rate, you increase the principal payment. Okay. Now I need somebody to maybe because I've done this on previous shows. All right. So this is why I need people to understand when it comes to loans, what you already know to be true, 99% of the time, the opposite is actually true. All right. So everybody's trying to get the lowest interest rate. Everybody's trying to buy down their rate when they can, because not because they need a smaller payment. It is because they want a smaller payment. So they'll buy down the rate to try to get that rate down low. Well, listen, let me ask you something. If I were your bank and I'm in business, if you're saving money, who has to be losing money? Yvonne?
If you're saving money
Yep.
and you're a bank,
Yes. If no. If you are, if you as a as if you are the consumer, and I set up a situation for you to save money, who would have to be losing it?
the bank would have to be losing it.
Why would I put up a situation where I'm losing money and I'm in business?
Boom.
Doesn't make any sense, but I think the reason why rates went down is because it was demand and supply, and what was going on 2 years, more than 2 years ago when mortgage rates were dropping.
Well, that's
But
not
now
what I
mortgage rates are going back up.
but what
So,
I'm talking about are people are actually paying to lower their interest rates now.
no, I did not know people do that.
Oh,
No,
yes. They're
no.
paying to lower their interest rates. And so, why would I set up a situation so that you could pay me to lower the interest rate so that I could lose money?
Well, in that situation, the consumer would be losing because the bank is not gonna lower your rate because you pay them. They're doing something in the back end that makes them win in the long run.
Here's
Yeah,
what we're
yeah, yeah.
talking about today. All right. Anytime you're on this app, on YouTube, or anywhere else that's giving you advice or information about anything that's financial, make them show you the numbers. Don't base anything on what you thought you believed from years ago, and somebody's just regurgitating what you thought you believed, and so you don't challenge them and say, show me the numbers. This is why I can show you the numbers on why a higher interest rate, if you can afford the payment, you're probably better off than at the lower interest rates we just left a few months ago. And once we go into the second hour, we're going to get into the mortgages piece. So somebody needs to remind me of that. And I'll show you while you are better off at the higher interest rates than the lower ones, and you may not want to buy down the rate. Now, if you have to, that's a different thing. But some people want to. That is totally different because they think they're putting themselves in a better situation. I'm going to show you the math on that
Can
today.
I ask you a question then?
Yes.
2 years ago, interest rates were pretty low,
Yes.
right? As I
Yes.
said, we got a rate for my daughter which was 1.45%. It went down. That was natural. That was not a buying down of a rate,
Right.
right?
Right.
But today, I think rates are up like around 5% or 5 point something because the bank is actually giving 5.25 on certificates of deposit. You know what those
Yeah,
are,
yeah,
right?
yes. Hmm.
Instruments. Yeah. So I think that's natural. In that case, that's okay, right? Because you did not pay, you're
Oh,
not paying
well,
the bank to lower your rate.
let me tell you something. I worked with a gentleman that was he ran the AIG office here in Huntsville. Okay, so his job was to manage other people's money. Okay, and one of his associates brought me into the office to try to embarrass me because I was telling one of their clients that there was an insurance policy they didn't need because they were one of my clients. So they were bringing me into the office to embarrass me and to make me prove what I'm saying is true. 30 minutes into my presentation, the manager of the office said, "How can I get your program?" Okay. And so he was just getting ready to get a loan. He's getting ready to get a loan, and he qualified for a lower interest loan. Okay, it was at the time I think they offered him like 3.5%. Do you know what he said? Because he gets bonuses. He says, "May I have 4.25 instead?" I said, "Oh, sir, you didn't, you didn't quite hear us. We offered you 3.5%." He says, "I know, but I would like to have an interest rate of 4.25," and they gave it to him. They've never seen that happen in life, where you're offered a lower interest rate, but somebody actually took a higher interest rate on purpose. And I'm going to, and I'm in the second hour, I'm going to show you why. Okay.
Ready for the second hour, my brother. Ready for the second hour.
All right.
because to me that doesn't really make a lot of sense to me. Like if somebody was paying like 3% and now they're at 1.5%, say on $100,000, I don't understand why I would say to the bank, "Oh, I know I don't want a 1.5%. I want 3%." That doesn't really make a lot of sense to me. So I'm here for the education.
Well, thank you. As you just set it up. And so this is, folks, this is what in the industry, this is what we call a teaser. So you'll stay around after the commercials. All right, Miss Yvonne. I'll say, Miss Bella, how are you doing this morning? Do you have a question or a comment? And if you're on the stage, I got Bella, I got Max, I got Raymar. I'm coming to you next. And we're going to see if we can get some questions out of the way. Miss Bella, are you there? Going once, going twice. All right. Come back a little later. Max, what's up? Do you have a question or a comment this morning?
Hi, good morning, guys.
Good morning. Good morning. What's up?
Yes, I have a question
Yes.
because I'm here in the Netherlands and sometimes it depends also on your income and everything. But sometimes when you paid off your mortgage, you're gonna pay more in taxes than you paid paying the mortgage. So I'm curious how about maybe that's in the US and Canada and all.
Okay. Well, let me do this for you because I get that question a lot, even in the U.S. Okay. So so you're saying that you get a tax break for a portion of the mortgage interest you pay. Is that correct?
Um,
Because it's not 1 to 1.
yes, also. Yeah.
Okay. So here's the thing, folks. Keep this in mind. If you're getting a tax break for your for the mortgage interest, as even if you qualify, it's not 1 to 1. It's not that I paid. I paid twelve to $15,000 in mortgage interest this year, and the bank is going and the government's going to give all of that back. They never do. It's just a percentage. And here's a little thing that I do when I do a live presentation. I get $1 in one hand and 27 cents in the other. Okay. And I don't, because it's constantly changing. So don't hold me to this and tell me that the rates are different. This is just an example. You pay $1 in interest to get 27 cents back from the government. $1 in interest, get 27 cents back from the government. My clients will, if they qualify, they will get that tax break for as long as they have the mortgage. Okay? If they qualify, they'll always get that. But they won't get it for 30 years. They're only going to get it for 7. Does anybody think they should keep a loan for 30 years so they can pay $1 in interest and get 27 cents back from the government? Does anybody think they should keep that loan for 30 years for that reason? Okay?
No.
All right. So here's the other thing you got to think about. All right. So if let's say instead of 30 years, I'm going to get that tax break for 7 years. After the mortgage is paid off, guess what, folks? I lose the 27 cents. Doggone it. But I get to keep the dollar to invest any way I want. Does that make sense now, folks? Do you know there are accountants that are teaching that very thing right now because they have been told that, but they've never done the math themselves to see why that would be important not to be able to do? And they're not looking at the total amount of interest that you can save. Here's why people are reluctant to look at what we're talking about and to do year after year after year what they've been taught. And here it is. People don't know how much interest you can save when you pay by paying off the loan. They have no idea. If they knew how much interest you could save, then the story would change. And we're going to get into that a little bit. Max, thank you very much for your question. All right. Says Raymer.
Hi, it's Ramyar. How you doing?
Hi, Ramyar. How are you?
I'm doing great. I'm just listening. Really, I don't have either a comment or a question. Just from
Okay.
listening and gaining knowledge as we go along.
Listen, we appreciate you. We appreciate you. Okay, Toyo from the UK. I see you there. What do you got for us today? Toyo? Are you there? Going once? Going twice. All right, we're gonna pull the refresh. And Raisa, is that how you pronounce it?
Yes, it's Raisa.
Raisa, how are you doing?
I'm doing great,
And,
guys.
and where are you from today?
Oh, I'm from Colorado,
Okay.
Denver.
All right, I see that flag there. Where's that flag from?
Oh, it's from Cameroon. So
Cameroon.
I'm originally from Cameroon.
All right, all right. Do you have a question or comment for us this morning?
See you there. It's
What do you
more
got
of a
for us today?
Hey, Mr. Don. It's real.
Toyo? Okay.
Hello, can you hear me?
Going once? Wait a minute.
Here?
Who?
Hello, can you hear
Hello.
me?
Somebody's.
I can hear you.
We're gonna pull the refresh. All right, somebody's got their okay. Toyo. Toyo. Is that how you pronounce it? If you're watching us online, you have to turn the volume down on your other device, okay? Because it's going to be crazy. All right. So Toyo, if that was you, I'll come back to you in just a second. All right, Raisa, do you have a question or comment?
So it's mostly a comment because we get into this depth without really knowing what's behind. But I'm already like 3 years in the US and I kind of get the system. And I'm really, really happy and I would say kind of privileged to have known this group in Clubhouse that you guys have been so transparent in these things. And I just want to thank you. And my mentor too, Karine, who's boosting us to know more on these things. So it's really amazing to know that this is what the system does to us. And as a fresh, I would say a fresh person in the United States, it's always good to know this kind of things. So really, I just want to be appreciative of all that.
Well, thank you very much for being here. So we're going to carry on and get to Miss Carrie. Miss Carrie, how are you doing today? Oh, I'm sorry. I'm sorry, Miss Carrie. I told Toya I was going to come back, but hang on. Toya, are you there?
Yes, can you hear me now?
I most certainly can.
Oh, brilliant. Amazing. Wonderful. Great.
All right. So are you presently in the UK?
I am.
All
I am
right.
in the UK.
All right. So tell us, what do you have a question or comment for us today?
I just wanted to just acknowledge you and just say what a blessing this is. It's always useful to learn, financial, and these are basics that we should know. We really cannot live without this. So um, I'm just listening, enjoying everything, soaking it all in, taking in notes, and I'm sure there'll be more. So I just want to say, thank you, and this is hugely helpful. Yeah,
All
thank you.
right, folks. Listen, with the amount of people that we have on the stage, if you're online, we're going to let you go after our 2 hour mark. Okay, all right, and we're going to continue on Clubhouse so that we can continue our conversation. Miss Carrie, what's going on with you today?
Hey, hey, good morning. So it is great. So I'm really excited about this math because for me, this math is actually mathing. I'm one of those people. I'm so grateful and thankful for this pill method. So today is the first time that I've actually been able to follow you along on YouTube and actually see the numbers. Now I follow the numbers with the AAPR and all that and kind of calculating the monthly payment. So I've been one of those people who've always wanted to buy points to get my interest rate lowered and all that kind of stuff. Never again. Definitely feel violated. Definitely feel like, hey, it's just like, come on, just shoot me already, so to speak. But definitely feel ultimately violated. I will never ask to buy a point. I will never ask for that lower interest rate. It's just like, no, just give me a mid range rate. But I am looking at some things. I'm working on something different. We always pay an extra payment or a few. We pay the mortgage twice a month
Okay.
on all properties. We just
Okay.
kind of pay them twice a month like that. But I am listening now. I got that part. I totally see where I could just kind of pay that interest. But I'm going to continue to listen into the program, and maybe you will tell me about how I can just what I can do, just like don't make that payment. Just kind of how much more money can I save? Just does that payment just go away? But I'll continue to listen into your program, into your teaching to kind of get that part.
All right. Well, thank you for being here. So let me help you out with a couple of things that I heard. Now, folks, you want the right interest rate for you. Now, this gentleman got the right interest rate for him because he gets bonuses and he knows how a bonus would affect his mortgage, so he chose a higher interest rate. Here is the thing. When people ask me, Don, should I do thus and so? You know what my first answer is? I don't know. Let's do the math. And then the numbers will tell you what's right for you. We're going to take the situation, we're going to plug the numbers in, we're going to do the math, and you're going to find out what's going to be good for you. There is no rule of thumb here that the same all the people can use the same bit of advice across the board. It doesn't exist. Stop taking that kind of advice from other people. Make them show you the math with your situation and see if the math is mathing. Does that make sense, Miss Carrie?
It does.
All right. So, folks, if you want to know more about what I do, you can go to ice10k.com, ice10k.com, and you'll see that's ICE, that's ICE, stands for Interest Cancellation Expert. Somebody can mute their mic, please. Okay. I can't find out where it is. Okay, here it is. All right. There we go. All right. So you go to ice10k.com and then you will find a button there that says Get a Savings and Earnings Report. Click the button. Fill everything out. Follow all of the directions. And then it will let you into our financial form. Fill out the form. Put everything in there about all of your debt and everything that we ask for. And one of my assistants will get that within the next 48 hours. And then we'll be able to tell you the month, day, and year you will be debt free and how much
Hey
interest
Don,
you can save.
say
Yes.
say that site again and I'll type it in the chat.
Okay. ICE10K.com. ICE, the number 10, the letter K.com. There we go. ice10k.com. All right. So that is what we're talking about, folks. So you can find out exactly what to do for you. We have a whole system in place, an artificially intelligent, cloud based computing system, AI, that you can plug all your numbers into and it will tell you exactly what to do. And it is so powerful. Listen to this, folks, and write it down. Our system is so powerful that we guarantee your results for a lifetime. You follow the program, we will guarantee your success. Nobody else is doing that. And says, Don, if I'm going to be done in 7 years, why do I need a lifetime program? Well, here's why. A lot of our clients, they'll pay off their mortgage, they'll put a renter in that house and buy another one. And then they buy another one. And I wish I don't have that sound effect where it says, and another one. I don't have that. So I have to do it myself. And another one. So do you not have people that came on in like 2008 and they're paying off their fourth house now? Oh yeah. And we've got people who have 6 mortgages or 10 mortgages, or even more than that, that are running it through our system, and we're saving them millions of dollars in interest. So yeah, it is a lifetime program. And you can just keep using it over and over and over again. And if you follow the program, the way the program is designed, we will guarantee your results. And we keep it right on the screen, right in front of you. So listen, this is math, folks. It's not magic. That's why I can guarantee the results for a lifetime. So who's next? We have Miss Phillips. We got Phillips, and I can't pronounce your name. Chinue. Help us pronounce your name, please.
It's Chinu.
Chinu, how are you doing today?
I'm good.
Do you have a question or a comment?
Well, after listening to you,
And
I
another
realized
one,
that I may be
and
paying my
another
loans
one,
forever.
and another one,
Um,
and another one.
okay, I've been paying my loan. I started in January paying it because it's in like frozen. Everything is frozen right now. So I started in January making payments.
Right.
My payments are 477.18.
Mm-hmm.
My loan amount is 57,095
Mm-hmm.
32.
Mm-hmm.
And I was trying to pull it up to see what the balance was on there because I hadn't looked. But I called the server and I was questioning how they were splitting the payment.
Yes.
Like, okay, so they told me that the payment that I'm sending in,
Mm-hmm.
they're splitting the payment between the loans. I have 7 loans. So they're
Right.
splitting the payments between those 7 loans,
Mm-hmm.
but they're not applying any of the payment to the principal. All of it is going to the interest.
Ah, yeah.
Every bit of
Yeah.
it.
That's the problem with an income-based payment, because
Yeah,
it gives you a payment you can afford, but it doesn't tell you how really expensive it is on the back end.
right. It's very expensive on the back end. And
Yes.
so, and then I also question them about um, what happens when the freeze is taken off.
Mm-hmm.
And she says, well, right now, she said the interest that's frozen is your past due interest.
Mm-hmm.
So whenever they unfreeze everything, the past due interest will have to be paid
Mm-hmm.
while the other interest, the current interest, will be accumulating.
Right.
So it's like you're never going to get out of it. You're going
It
to be in this sinking hole forever.
That is so true, unless you know the rules to the game.
Right.
Right. And we can help you with that. We can help you with that. Isn't that something?
That I had no idea, and if she probably wasn't supposed to tell me that, but she did.
Well,
So
listen. They're doing the people who are answering the phone are doing the best they can with
I know they are. I
what
know.
they're being taught. Okay. So here's the
Yeah.
thing. Once you have know how many loans you have, and they have to show you on the website when you make a payment how it breaks down to each loan. So
That's what they're doing.
we
That's what
actually
they're
need to
doing.
have each loan individually. So
Okay.
once we have that, how much you owe, what the minimum payment would be, and the interest rate on each loan. Our computer would go through that and say, okay, let's say you have 9 loans. And the program says, based on your interest cost, we're going to take a little money that we've saved up and we're going to apply it to loan 3. You would need to know which one that is so that you can direct that extra payment to loan 3 by telling your student loan company, this is where I want that money to go. And
Okay.
it'll start saving you interest. Okay?
Okay. Okay.
All right. So listen,
Okay.
go to pillmethod.com. We're just going to make it easy for everybody. Go to pillmethod.com. That's my website.
Okay.
And when the video stops playing, there's a button that says get a savings and earnings report. Follow the directions closely, especially the directions on how to confirm your cell phone number. Once you click
Okay.
confirm, only click it once. We're sending you a code as a message. Get that message, put it back into the website, confirm that, and then click on I want to save now. That will let you
Okay.
into our financial form. See, we're trying to keep robots out. Okay.
Okay.
That'll let you into our financial form and you fill it out. All right.
Okay.
And so
Okay.
once people know and then you'll know the month, day, and year you could be debt free and how much interest you could save. Now, to get somebody to talk to you about it and to go over how this is working for you, then what you want to be able to do, then what you'll do is we'll set up a consultation. Our consultation for people who are find out about us from this show is only $150. That's a
Okay.
consultation. And then if you want to know if you want to take on our lifetime program, a tiny bit of the interest that you would have paid to the banks, just a small portion of that pays for your lifetime program. So it's money you would have paid in interest anyway, but you get to keep a whole
Right.
ton of it. Oh,
Okay.
it's going to be that's what's called a net zero cost to you.
Okay.
Okay.
All right. All right. Thank you.
All right. You are so welcome. All right, folks.
Hi, Don.
Yes. Who's
It's
next?
Toya here.
Yes.
It's Toya here. I just want to quickly say I've been on the website,
Yes.
but because I've got a UK number, it's not
You are so right,
responding.
Toyo. So
Yeah.
go to my IG. All right.
Okay.
And
Yeah.
are you also on what is that phone? No.
Instagram,
Yeah, go to my
Clubhouse,
WhatsApp. Go to Instagram.
what? That's yeah, yeah,
Give
yeah.
us your WhatsApp number, and someone will have to call you, and
Okay.
we're going to take your numbers over the phone. But here's
Okay.
what you
Just
could
so you
do.
know, I'm following, and
Yeah,
yeah.
here's what you could do. Here's what you need. All right, quickly. I need to know how much you owe on each loan. That's number one. Number
Okay.
two, and I need and no rounded numbers. So as specific as you can. How much do you owe? What is your minimum payment that the bank is
Mm-hmm.
asking for? Not how much you pay, but how much the bank is asking for. Minimum payment and the interest rate
Mm-hmm.
on each one of your loans. Then,
Okay.
then we'll need how often you're paid. So if you're paid fortnightly, you didn't think I knew that, did you?
Yeah.
If you're paid every 2 weeks, okay,
Mm-hmm.
then tell us how much you're paid of your net paycheck per week, every 2 weeks, or monthly, or however you're paid. What your paycheck is and how often you're paid, and then how much money is left over after all the bills are paid. Those are the basic numbers. If we have those, you can email us at info@thepillmethod.com. Send that over to us.
Info
And we'll get started.
at thepillmethod.com. Yeah, okay. So for me, basically I've got about £40,000 in
Okay.
debt.
Okay.
And it's over a car loan, some money I used to invest to help family. And what's the other one for now? I think 2 credit cards.
Okay.
So and then a mortgage, I think making five or so.
Yeah.
So I've got
So
my mortgage.
yeah,
Yeah.
don't leave anything out. Put it all in,
Okay.
and we'll help you.
Okay, I've just never been in that much debt in my life.
Well, listen,
I
what
mean, it's all
you're gonna
used for
find
good
out what
things,
you're gonna
but
find out it is the cost of managing the debt that's the problem, not the debt itself. I love
mm,
borrowing money. It's the best thing since
mm,
sliced bread.
mm. Yeah, and I think also, like you mentioned earlier, for us in England, pretty much the same with you guys over
Yeah.
there
Mm-hmm.
in US. I mean, my mortgage was at 1.99 when I got it four and a
Yes.
half years ago.
Mm-hmm.
It's I have to call it in. The product ends in April.
Right.
Normally, in good times, you can start by 3 months before. You can lock in a new rate and start.
Yes.
But because everything is higher now, there's no point doing that. I'm going to just let it run out. But obviously, I'm really nervous about the 5% I'm hearing now. It's
Well,
going to really
we're going to show
impact cash
you.
flow.
Hopefully, we're going to run out of time on our show on our live show. We're going to run out of time there, but we're going to come back here and do it again Wednesday so we can show the second
Wednesday.
half. But we're going to do an extended show here on
Mm-hmm.
Clubhouse, and then we'll just show people how to pull it up on their own computers. All right. So hang around, everybody. I want to get to everybody so that we can get their questions done. All right.
Can
So
I just get the time on Wednesday, please?
Wednesday, it's going to be 7 a.m. Central Time. All right. And right now, it is quarter after 10, and I think you're 6 hours ahead.
Yeah, we're 4:15 p.m. here.
Okay. So that way, give you an idea of when we're going to be coming on. So,
Lovely. Thanks so much. I'll,
plus,
I'll shut up now.
that's okay. Plus, it's recorded. You'll be able to see it again. All right. Thank you very
Thank you.
much. All right. Princess, I see you there. What's going on with you today?
While everybody was talking, I just had a question and I was curious to know your answer.
Yes.
Um, do you have any tips or advice on where you should put your, like, if you want to create a personal retirement plan as an entrepreneur?
Y- yes and no, and I'll tell you why. Okay. What now you're asking for information that you have to, some of it you have to be licensed to give you. And I don't have the license, but people who work with me and for me do have the license. So we have people. So not only does the pill method help you with debt elimination, we help you with wealth creation as well. So if you want to know, we have people that are on our team that can answer the question, but I'm the only one in the office today. But the answer is yes, but I don't have those answers. I only know what they teach me. And if you ask me specific questions about investing, it's actually illegal for me to repeat what they've told me. Does that make sense?
Yes, that makes sense.
Okay, so we have the information. So give us a call. As my business card is ICE, the number 10, the letter K.com. All right, and then you'll be able to find our number under the button that says Meet Don Daniel. Okay, Meet Don Daniel. Under that button, all of our numbers are there. All right. So give us a call. We'll plug you in and we'll help you to do what and answer some of those questions for you. Okay.
All right, thank you.
You're welcome. Fiona, I see you there. Are you ready with your question or your comment? All right. Not yet. Going once. Fiona going once. Fiona going twice. Tyann, Tyann, how are you? Are you there?
I'm sorry, I'm here.
All right. Am I pronouncing your name correctly?
Yes,
Okay. How are you doing?
I'm good. I was on with you last Sunday about the mortgage,
Yes.
and I do have a question.
Mm-hmm.
Once you make your first mortgage payment and then you make the first principal payment so that you're ahead of the chart, do you still have to make that March mortgage payment?
That is an excellent question. You have a payment every single month. But instead of 360 payments, if you have a 30-year mortgage, if you're a P.I.L. method client, we're going to get you down to about 90 monthly payments instead of 360.
Okay.
But you do have a payment every
Cause
single month.
okay. So you still do have to make that payment,
Most
even though you're
definitely.
ahead of the
You're not ahead.
yeah.
You're not ahead of the schedule. You're saving money on interest. So we're going to teach you what all of this means. You can't pay a mortgage into the future. Okay? You can't get ahead of the game. But what you can do is save the 50 to 75% of the interest that they want to charge you. Okay? So what you're doing, you're not making the loan pay off faster, you're making it pay off cheaper.
Understood.
And
Thank you.
because it's cheaper, that's how you pay it off sooner. So our focus is not on the speed, our focus is on the cost. What does it cost to manage the loan? And we reduce the cost. And we show you how to reduce the cost.
Thank you, Ice.
You're welcome. So listen, continue to work with us, okay? Tim, how are you doing, sir? Tim Petty Cart. I cannot pronounce your last name. Going once, going twice. Tim, are you there? All right, folks. So I've gone through all the questions. Do I have any? Let's see. Questions in the chat. Let me see. Interested in a private. Okay. Don't come into my room trying to sell stuff. Okay. We're going to delete all your stuff. Stop that. All right. That's rude. All right. Okay. Hannibal, how are you doing, sir?
I'm doing great. I'm here to support your room because I know you give people value, and I'm very impressed that people are here on this Sunday, not doing typically fun stuff. We're here in the math room essentially to learn how to change our lives and things like that. So I'm excited that there are other positive, progressive people in the room, and that's the only type of place that I'm personally going to be in. And I'm only also going to be in a room where I'm not the smartest person in the room. And Don is here, so I'm definitely not the smartest person in the room.
Yes, but you definitely are the best traveled and the best the best well dressed.
Thank you.
The best dressed guy in the place and the best traveled guy in the place. All right. All right. So I want to make sure that I got to everyone. If you have a question, I haven't gotten to it yet, go ahead and flash your mic, and our administrators, our moderators will catch that. And I see Tammy here. I haven't had a chance to talk to Tammy this morning. Tammy, how are you this morning? Are you available? Tammy going once?
Hey, while we're waiting on Tammy to come in there,
Yeah.
Don, I just want to make sure that folks know where they can go to get their savings and earnings report. I haven't heard you say that. I just want to make sure we
All
prime the
right.
pump. And
Let's go over that. Let's go over that right now.
yeah,
Listen, folks, we're putting it on the screen, and you want to go to either ice10k.com, ice10k.com, and somebody knows how to put in a savings report because I just received one.
there it is. Look at
All
that.
right. So ice10k.com. And then there's a button that says get a savings and earnings report, or you can go straight to my website, which is pillmethod.com. And you can click on the button that says get a savings and earnings report. Once you do that, then follow all of the directions that would let you into my financial form, fill out all of the data there that we need, and then someone from my staff will call you to confirm the data within 48 hours. Once we confirm that data, then we can set up a consultation. The consultation is only $150, and we even guarantee that. Okay?
But I think there's just wanted to add on there, Don,
Sure.
that the savings and earnings report, you're going to get that whether you get the consultation or not. Am I correct?
Yes, that is correct.
And
You can
so
get
I just want to encourage anybody that's you may have had a question, and there may be some questions that Don's going to still yet get to even after we go offline on the online portion. But I just want to make sure that folks know the savings and earnings report is really going to be the end all be all. Everything else is, he's going to give you general best practice. No, I wouldn't say best practices, but he's going to give you general information. But
what works for you may not work for me. And so the savings and earnings report is going to be very specific to your situation. I had one and it completely floored my wife and I. And we decided immediately that we need to make some financial changes. So now we have our own opportunity cost calculator that we purchased through the P.I.L.L method. That is the real secret sauce. Everything else he's given you, you may be mind blown, but I'm telling you, the real secret sauce is that opportunity cost calculator, which is the P.I.L.L method, and just guides us through like financial GPS. Is coming up on November 27th, so bills are due coming up on the 1st. We're getting ready to do our P.I.L.L method stuff right now. So I just wanted to say that, yes, I get to serve as your producer for the show, and we are getting ready to land this plane. But I wanted to also make sure folks know, man, I'm not just a producer. I am a client. I am a client, and Don is helping us have a much better financial outlook for our family, for our generational wealth, for our investments, for plans for the future. And I don't want to keep this to myself. I want to make sure that as many people as possible can get theirs too. So just wanted to highlight that. Hope that's okay, Don.
Oh, listen, folks. That was Kirk Nugent. He is, and don't look for him on the stage if you're on Clubhouse because you won't see him. All right.
I was confused.
Yes, he is our producer, and
I'm good. How are you doing? I'm running the cafe at my son's church, so that's why you can't hear.
Okay, Tabby.
I got her.
Okay.
Thank
All
you.
right. Listen, folks, that was my producer, and he's running the back end so that we can make sure that everybody can see these examples, not just for today, but forever. And he's our producer running it through StreamYard. And that's what's going on here, folks. So that's why you couldn't see where he is on the stage. But thank you so very much for being here. We're almost out of time. We're here for our first 2 hours. We're going to continue on Clubhouse, and I'll show you how you can look at some of these next examples. But we're going to finish up one more example that's on screen, okay? But before we even do that, somebody mentioned my book. So make sure you want to go to Amazon and look for the book PILLmethod.com. I'm sorry, Pill Method, a better way to eliminate debt, and then get that book, and it makes great Christmas gifts. Oh my gosh. So get one for yourself. Make sure you get it for other family and friends so that they can start learning the basics here. Okay. So now get that. Let's take a look at, I want to show you one more example for everybody who's on screen. And then we're going to hear from Dr. Eric Thomas, E.T. the hip hop preacher, who paid off his mortgage in record time using the P.I.L.L method. And then we'll be able to say goodbye to our folks online. But watch this, folks. Watch as we take a look here. I am pulling up another amortization schedule. I'm putting on 25 payments here. After 25 payments, the principal paid down would be $66.39. $66.39. I want you to know how powerful prepayment actually can be. If you understand it, if you know that you're going to pay $66.39 over a 2-year period, you could prepay that money, knock off 2 years off the loan, and save yourself over $1,100 in interest you would normally have to pay. Folks, when you know the rules to the game, you can save a ton of interest. And we're going to be going over some additional questions about mortgages in just a little bit. But for everybody who's online, thank you very much for being here. Thank you for your comments. Thank you for putting in your time. But we want to say goodbye to you online, but hang out here on Clubhouse. We'll see you in just about 90 seconds.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.